Good morning. Welcome to IG's early morning call. It's Wednesday, the 1st of February. Welcome to a new month. Let's take a look at the headlines as we begin with the currency markets, which are eagerly awaiting these big interest rate decisions this week. We've got the Fed later on today, European Central Bank, Bank of England tomorrow, monitoring what's happening with the US dollar and other currencies in the session in today's trade. Hey, man, it's been a good morning so far for the pharmaceutical sector. We've seen numbers out from both GlaxoSmithKline and Novartis looking pretty good. And late last night, we saw a big drop once again in shares of Snap on the concerns about the outlook for the business. Take a look at volatility. As we've been reporting, bumping along the bottom. Just those few days ago, we saw a new low that we've not seen since November 2021. You can see we're consolidating around this low point today. And in fact, what we're looking at today possibly is a rise at the beginning of today's session across the European markets. You can see here clearly the recovery that we saw yesterday, the shape of the candle that we saw with that big lower wick. We saw the markets taken down to levels at one point yesterday not seen since the 11th of January. And then came the fight back. We saw a big recovery last night on Wall Street from the lows we had. We'll take a look at that in just a minute. And the European markets on the 24-hour session followed that. The FTSE was one of the few indices on European markets yesterday which actually saw losses on the cash session. But we ended up well off the lows on the 24-hour markets. And you can see here at the moment we've got a green candle showing us where we are on the trading day at the moment at 77.85. So the market's grinding high once again. MACD continuing to point lower, but you can see the boxes at the bottom here beginning to flatten out. Let's take a look at what's happening across the European continent, because same sort of price action. These long lower wicks means that there had been a lot of taking this market down, a lot of short positions which have been taking this market down. But then came the recovery. And in fact, late yesterday, we saw the German DAX up on the 24-hour markets. And it was up on the cash session yesterday, as indeed was the same thing in the French markets. And in fact, in yesterday's session, we saw a new higher high, up 26.55% from the lows, taking us up to this right shoulder of this head and shoulders pattern that we saw here, which successfully completed back in February 2022. So a new higher high not seen in 11 months on the French markets in yesterday's intraday session. Got a red candle there at the moment. Interesting to look at what's going on there. Let me just quickly work out what is happening with the French markets there at the moment. This is where we closed out yesterday's session at 4:30 yesterday. So you can see we are just tentatively above that by a few points at 70.93. So at the moment, at least, we're looking as though we could well see a stronger start at the top of the hour across the European markets. Overnight in Asia, we've seen some economic data out in China. I'll cover in just a minute, but we got, broadly speaking, gains across the board. You can see the Hang Seng Stock Index, the best performer. In China, factory activity continued to shrink in January, although more slowly, according to a Caixin Services factory survey. The S&P Global Manufacturing Report from China's Caixin showing that Purchasing Managers Index rising to 49.2 in January from 49 in December, staying below the 50 mark for the sixth straight month. Anything below 50 indicates contraction. So we've not yet got that successfully opening up of the economy yet in terms of expansion, in terms of activity. But it's getting there very slowly. We've got to wait a while, I think, before things really start to begin to kick in with the Communist Party's new strategy of zero COVID. This is in contrast with the official MBS data earlier in the week, which showed factory activity returned to growth above 50. Let's take a look at what's happening, or what happened late last night in the US markets as we saw things close out yesterday's session. You can see their gains across the board with the tech sector the best performing area of the market. And this before we saw AMD out last night, which actually saw a nice recovery in the markets. That being said, Snap was in amongst the worst performing post-market last night. We'll cover both those in just a couple of minutes' time. This is the NASDAQ on the session today. Big recovery from the lows that we saw, ending up with a very strong green candle yesterday. And in fact, we're building on that now today at 12,071. Just a quick update on where we are on the Dow, just to take a look at the area of the market where there's not so much, or it's hardly techs actually, 34,014, building on the strong day that we saw yesterday. Now, it's the US interest rate decision tonight at 7 p.m. UK time. While there's little move in the currency markets so far this morning ahead of the announcement, it is an event that could well move the markets when we see that detail coming through from the Fed and also the press conference a little bit later on. Let's take a look at the detail as we're expecting it to break this evening. It's expected to raise interest rates by a margin of 25 basis points, a quarter of 1 percentage point, to a range of between 4.5% and 4.75%. But the big question is, how long will the Fed remain on this tightening path? Now, this 25 basis points expected follows a 50 basis point increase in December and 4 successive 75 basis point interest rate rises previously. Let's look at what's happening with the dollar basket. As I said, not much move at the moment at 101.73. Now, this direction of travel here is showing the dollar weakening away from the highs that we saw back in September last year when the Fed was in that aggressive tightening cycle. Since then, we have seen lots of evidence to suggest that the Fed is wanting to take its foot off the pedal a little bit. 25 basis points is already priced into these markets as things stand there at the moment. There's a little bit of an uptick in the momentum, indicating that there is an appetite, I think, to take this market higher. But if the Fed comes through with anything like the sort of dovish reports in the press conference that some are expecting, we could well see some of that unwound. So how do you trade this? Well, let's take a look at the opportunities here. Let's assume that the Fed is going to be dovish, maybe more so than had been the case previously. The euro-dollar trade would go higher, and at 108.73, you'd put your stop below this area down here at around about the 107.50 level, 108.73. The area to beat is this 109.36. Which were the highs that we saw back on the 21st of April last year. Now, that's long euro-dollar, assuming we get a dovish Fed. If the Fed looks like it wants to keep its foot on the pedal, if it wants to continue to try and combat inflation, which is certainly the mantra that we're getting and we have in the past, and it's what central banks are meant to be doing, then you would go short on this. And I think there's more money going into the dollar if we see something more hawkish from the Fed, in which case you go short on this with a stop above this area up here at around about the 109.70 level, with a view to taking this then lower, depending on what the outcome is of that interest rate decision and the Fed statement tonight. Just want to show you what's happening in sterling against the US dollar. This is sterling having risen up to a level at 124.46 with the highs we saw recently back on the 18th of January. Since then, there's been a little bit of consolidation going on. Same sort of thing. If you're looking at a dovish Fed, you'd be taking this up. In other words, you'd be long with a stop below recent price action. If you think that there's going to be an aggressive Fed, then obviously you'd expect this market to move lower on the session around that decision tonight from the Federal Reserve. Just wanted to remind you as well, we've got the Bank of England and European Central Bank tomorrow. I'll be with Chris Beecham at midday tomorrow to take a look at what's happening live on the IG platform with the Bank of England interest rate picture. 50 basis points is expected. That's what the markets are looking for from the Bank of England tomorrow. And then a little bit later on in the day, we get that decision from the European Central Bank, also expecting 50 basis points. I'll be talking there to Axel, IG's chief technical analyst at that point. Now, let's move on and take a look at what else is happening. 10 a.m. this morning, Eurozone consumer prices that we are getting. Expectations are there for a 9% increase year on year. This is critical because this feeds into that decision from the European Central Bank tomorrow. If we see anything more than 9%, you can expect the European Central Bank to absolutely keep its foot on the pedal and keep on driving an aggressive interest rate policy to try and restrict some of that money flow around the European economy. 1:15 p.m. today, we get the ADP employment change. This is the private payrolls number, expected to have created 170,000 jobs in January. 235,000 was the number we saw back in December, which was an upside surprise. 3 o'clock this afternoon, we then get the ISM manufacturing PMI data, expected to fall to 48 in January after a 48.4 reading in the previous month. Also at 3 o'clock, JOLTS. This is the job openings number, expected to fall to 10.23 million in December, indicating that there are less jobs there around at the moment in the US economy. Friday's non-farm payrolls, just to remind you that Friday is also a big day for data. Economists anticipating 185,000 job creations in January, following 223,000 in December. That, like the ADP, was a slightly stronger number than had been anticipated. The unemployment rate is expected to rise a notch to 3.6%. Average hourly earnings, 4.3% year on year, well below the CPI. So it means that despite the fact that people are getting more money, it's not as much as prices are rising. So the salaries are losing ground against prices generally. And I'll be with Josh on Friday at 1:30 p.m. Guiding you through what's happening there in terms of the non-farm payrolls number and how to trade those in that picture that we have it there at the moment. Let me just run through some of the companies worth watching. Vodafone, I think, is going to be an interesting one at the start of the trade today. Third quarter numbers out today. Now, on the surface of it, there are some of these numbers that are showing some pretty good figures. And in fact, that service revenue growth of 1.8%. Okay, it's down from 2.5% in Q2. But I've just been looking at what's been happening on the Bloomberg terminal, which was estimating a 1.75% service revenue growth. So I think that itself is better. UK revenue up 5.3%. But Germany is a big part of this business, and that's down a disappointing 1.8%. Italy, even worse than it, down 3.3%. So you can see that some of these numbers that have been coming through here have been a little bit of a disappointment. The portfolio progress, the company says the Vantage Tower Strategic Co-Control Partnership is progressing towards completion. They're shedding some of that responsibility. Vodafone Hungary, disposal completed. The transfer of Vodafone Egypt to Vodacom has now also been completed. So that's something that's been done, dusted, and is now finished. Let's take a look at the share price chart. Yesterday on the way down to 93 pence, down almost 0.9%. I'm a little bit, I'm going to stand back on this one. I really don't know which direction this is going to move. There is some good news in this number this morning, but on the whole, and as I say, some of the big parts of the business like Germany is showing a little bit of a disappointment. Let's take a look at what's been happening there in the pharmaceutical sector, because there's far better news coming through from both Novartis and GlaxoSmithKline. I want to take a look at GSK first of all, delivering strong 2022 performance with a full year sales of 29.3 billion sterling. At the spin-off of its consumer health unit, Haleon, last year, absolutely a turning point for this business. As Emma Walmsley says, the chief executive, in her statement this morning, she says that 2022 was a landmark year for GlaxoSmithKline. Let's take a look at some of the detail. Fourth quarter adjusted earnings per share 25.8 pence. Estimates have been for 22.5 pence. So that's better than expected. That produced an operating profit of £8.15 billion. Operating profit growth to be slightly lower in the first half of 2023. Sales up 19% to 29.2 billion. Vaccines up 17%. Specialty medicines up 32%. General medicines up 5%. Turnover is expected to increase between 6 to 8%. Adjusted operating profit expected to increase between 10 to 12%. And adjusted earnings per share expected to increase between 12 to 15%. These, on the whole, look pretty good numbers. And I think that Emma Walmsley has really struck a chord there. And the moves that strategically the company's done last year with Haleon have been really well accepted. Let's take a look at what's been happening on the share price chart. As of yesterday, 5 days of gains, closing up above the 50-period moving average yesterday at £14.28. I think this is sitting pretty for a positive start. If you're long on this, not a trade recommendation. Stock goes down here at around about the 1380 level. 1428 is where we're starting. And upside, well, we've got some headwinds appearing up here at the red line at 1532. Another one looking good, Novartis, the Swiss pharma group, expecting to say core operating income will grow in a mid-single-digit percentage range in 2023. I think we've got some details there for Novartis on its fourth quarter figures. Core EPS of $1.52. Estimates have been for $1.42. You can see their sales coming in a slightly disappointing number, but I think broadly speaking, Novartis is doing the same sort of thing that Glaxo is doing, and it's got gains across many of its overall units. Anything I'd say is technically this was a bearish engulfing candle yesterday. Bearish engulfings and bullish engulfings, they do rely on a follow through on the following day. So all I'd say to you is if we do get a lower print to start off with, you're then looking at this level down here, the 200-day moving average, as an area of support to watch out for at 8,200. 8,258 is where we're opening. I think on the whole, though, Novartis looking pretty good. Let's wind the clock back and take a look at what happened late last night with Advanced Micro Devices. You remember this time last week we were talking about Intel and the disastrous numbers we got from Intel. This is absolute chalk and cheese. Intel, AMD yesterday coming out with shares up in extended trade after posting a marginally better than expected earnings and revenue for the fourth quarter and expressing confidence in the rest of the 2023 year. Chipmaker earning 69 cents a share, adjusted Q4 revenue rising 16% to 55.6 billion. AMD's data center segment revenue growing 42% to 1.7 billion, offsetting a 51% drop in revenue in the client segment. Chief Executive Lisa Su said she was confident that AMD will keep gaining market share this year, adding to this that the second half would be stronger than the first half of the year. I want to show you what's happening with the share price chart because it's an extended trade last night. We saw all the activity and it showed some healthy gains. And in fact, you can see intraday, we challenged this red line here, the 200-day moving average at 79.43. The stock looking as though, well, it opens at 9 o'clock this morning, all sessions, but I think we've done all the really sort of major work that we saw yesterday. That print high we saw yesterday was the highest we'd seen since the 1st of December. So AMD is very, very different from Intel. Look at Intel last week. This is the red candle we saw last week, and it produced its figures. We've seen a little bit of an uplift since then, but it issued a lower than expected sales forecast driven by loss of market share to rivals and PC market downturn. And overnight, Intel announcing broad cuts to salaries. Now, this could be positive at the start today for Intel. The reductions will range from 5% of base pay for mid-level employees to as much as a 25% salary slice for the chief executive, Pat Gelsinger, while the company's hourly workforce pay will not be cut, according to those familiar with the news out late last night from Intel. Snap shares last night absolutely tanked, 14% down in extended trade last night after the owner of the photo messaging app Snapchat warned that the headwinds the company faced over the last year will persist through the current year. Let's take a look at the figures as we saw them released last night. Revenue for fourth quarter ended December 31st, 1.3 billion, flat from this time last year, in line with analyst expectations. Net loss was $288 million against a net income of 23 million in the previous year. On an adjusted basis, it reported earnings of 14 cents a share. Now, that beat Wall Street estimates of 11 cents. You've got to give them credit for something. In a letter to investors, Snap said it suffered from weakening economy and an increased competition from other social media platforms, adding that current quarter revenue could decline by as much as 10%. Look at this. Look at these big declines we've seen here. In fact, I can draw another one of these here. Every single time we get a big move, it is always down to these earnings. Every single time. That being said, this time last year, as I just said, that we ended up with a profit, and that saw a gain. But outside of that, every single time we get this big slicing of numbers. 12.62% down last night, as at the close of the session. All sessions last night on the IG platform were expecting to open negatively when things get underway later on the US share trading platform. Tonight, we've got after the closing bell, Meta Platforms, the parent company of Facebook, expected to post earnings of $2.26 on revenues of 31.53 billion. This is a company also trades all sessions. You'll be able to trade this when we see the company report earnings tonight. Look at this. It closed out just below the 200-day moving average. That's been a cap. We haven't traded above the 200-day moving average since December 2021. Had to see how things go. Meta's lost roughly 2/3 of its value over the last year, leading to a group to part with 13% of its workforce. Let's look at other areas of the market very, very quickly. I've got to talk to you about oil. Yesterday, the API Institute showed that crude oil stocks rose by about 6.3 million barrels last week. Gasoline stocks rising by 2.7 million. And we also saw diesel and heating oil rise by about 1.5 million barrels last week, according to the API. What happened yesterday was that we saw a snapback in trade. 3-week lows we were talking about this time yesterday, weren't we, on the price of oil? And then came this build on that, coming back aggressively, and we're holding on to yesterday's gains. That's the US crude market. Just to show you what's going on with spot gold, just to complete the picture, still away from the highs that we've seen recently. Yesterday, big recovery like we saw in the equity market. It's on from the lows, and in today's session, we're down just a touch, easing back into yesterday's gains. That is it from me. Do watch out for those pharmaceutical companies at the start. I think they're looking pretty good for the beginning of today's session. I must reiterate that is not a trade recommendation, but that's just how we see things here at IG. GlaxoSmithKline, Novartis, possible gains on the upside. Vodafone, not so sure about that one. All will be revealed at the top of the hour. We'll be back at 10:30 with Charting the Market.